Well, it was a muted Friday for the bulls, but this week saw the markets end in the green. We had the Sensex as well as the Nifty Bank. Both of them made fresh all-time highs this week itself. And all sectoral indices, they did pretty well, barring the Realty and the Energy Index as well. On this week's edition of Editors Roundtable, we'll be discussing a whole host of issues. Well, we'll put the spotlight on the markets. We'll take stock of all the IPOs. And we'll also ask whether December is going to be a good month. But more importantly, well, we'll be saying that the markets are at all-time highs. Unfortunately, some of the stocks, well, they haven't really lived up to expectations. I'm Nigel D'Souza, and joining me on the show today, Anuj, Prashant, as well as Nimesh. Hi, gentlemen. We're missing Sonia today, but we'll have to make do.
Oh, absolutely. It's a tough thing to do, right?
Yeah,
Just to fill in with Sonia, but we'll try to do that as, to the best of our abilities. I think we'll discuss all of that. The markets did well, though towards the end, the markets give very healthy signs about the mid-caps catching up. And overall, you did get a sense that while there was exuberance in some pockets, and the market overall is still looking good for more. And the market has got different engines now. IT is firing, banks are firing, Reliance is firing. So I think the market's looking good.
I have to say, though, the Power Pack panel yesterday around the same time was much more compelling, right? With all the little ones with Shireen. I mean, it was...
nothing can beat that panel.
I mean, I think that was the highlight of the week.
Absolutely.
Beyond markets.
Absolutely.
Are they getting a change of timings?
I mean, we're trying. We're trying.
All right. Well, let's take stock of the market then.
Anuj, absolutely right. Things are coming and going. But what I want to do is, we are waiting for the Nifty to get to all-time highs. I think that is what we're doing. 100 points away, so it'll come. It's a matter of time. But is sentiment already at an extreme level, extreme bullish level? And I want to put out 4 points which kind of explain that. Point number 1, Nifty futures premium today, it closes 151 points. It's at a record high. Actually, even yesterday, at the time of expiry, it was about 140 points. People were rolling over positions with 140 points on top of the, spot. That I think single data point of futures premium being at a record high tells you where we are at. And this is with the Nifty already at almost at new highs, and the Sensex making new highs as well. A little bit on the futures and options side, FII long positioning now is at a 2-year high. It's nearly at about 88,000 contracts. It was actually even higher. It's come off a little bit post-expiry, but it's at a 2-year high. If you add FII plus client is, family offices, HNIs and all of that, client position was also very, very large. Client side has wound down their long position. That stands at about 5,000 odd contracts as of yesterday. So that is not very much, but that has been subsumed by what FIIs are doing, and FIIs are clearly very, very bullish. On the other hand, point number 3, DIIs are at the second highest short position they've been on the record. That number as of yesterday stands at 68,000 odd contracts. And this is quite incredible, right? FIs versus DIIs, we were talking about FIs versus clients, FIs versus locals. DII positioning in the futures and options market was not very large. If you go back a couple of months, go back a couple of years, it was almost non-existent. You could argue that they are actually taking these positions to hedge against their positions in the cash market. But you could argue the same for FIs as well. So we have to take the data as is. And the last point, market-wide puts exceed calls. And this is, not just Nifty, but market-wide puts exceed calls by a record margin. Over 88,000 contracts is the difference between puts and calls. Typically you would say this is a sign of protection, more puts in the system, etc. But if you go back and see, whenever you are at these kind of extreme levels, puts over calls, it's a sign of a bit of a, hesitation at the top, the market starting to wobble a little bit. Will we kind of get that or no is the question. As can be seen, local sentiment is, pretty strong. And HNIs, etc., even though DI data shows otherwise. And FI sentiment, as can be seen from the F&O number and the futures premium, remains pretty solid out there. Nimesh, what are you picking up?
Prashant, it's not we all know that there is a party on the Dalal Street. We are almost at record highs. But you know what? There is party outside the Dalal Street as well. And we all know that it's a busy wedding season. I was just talking to some large investors. the schedule is tight till the 15th of December. They are attending some 18, 19, weddings. And the, venues are ranging from Koh Samui this week to Maldives to even Jordan. Can you believe this? So now, marriages are happening and parties are happening in Jordan as well. So, that's the kind of, mood which is there outside the market. So that sums up the kind of money people have made in the last 2 years in the capital markets. But having said that, we are almost at new high. So that's given now that it's going to come very soon. The good part about the fag end of this week was the participation in the mid cap and small cap. Looks like that is back, and the amount of stocks which are hit upper circuit today was just crazy, and it looks like that the momentum was back in that space. So I guess December could be a month for mid cap and small cap to join the party and do a bit of a catch up. So that's something to watch out. Having said that, in terms of supply, that still continues. So the private equity investors are still looking to exit the platform companies, the companies where the locker is open up. So even for next week, the indication is at least 4 to 5 large blocks can happen. So that's again something which will put some pressure on the platform companies. But I guess for our markets, December is going to be a lull in terms of the flows. I guess the big allocation will start only by January first week or by January 10th. I think that's going to be very important, the fresh allocation for India. Remember, we've outperformed hugely in 2022. So, next year the allocation will be important. If China, improves there, maybe you'll see a bit of money shifting from India to China. So I think that's a big debate point on whether in the fresh year, will India continue to see the kind of money that we've been seeing in 2022. So that's again something to watch out. But I guess, the big talking point, what I've been talking to investors is the list of, weddings across geographies, something which has been
hope to get an invite.
Very exciting,
Getting off to.
I think
I haven't got any invites.
Great news. Hoping for an invite actually. But Nimesh, the point that you made, I think Friday, a lot of retail portfolios would love Friday.
Yeah,
we had 5 days of the week. The 4 days, like they were wondering, not much has happened. But on the 5th day, they were saying it's beautiful because the portfolios would be feeling good. Anuj, we are talking about all-time highs. You reach out to the common man, they're saying, no, my stocks are not at 18,500. They're much lower. You put in a piece on that?
Yeah, and unless you are in the stocks which really matter this, over the last couple of months, and stock selection really becomes important. Let me just go close to the big wall and explain in numbers what I'm trying to say, because we keep hearing and we keep talking about the fact that it's been a very narrow rally and that portfolios have not done as well. Has it really been the case? Well, yes and no. First, let's look at the big numbers. Now, this is an eye-popping number. September 29 is when the Nifty made a low. And I have taken all prices from this level so that, it's apple-to-apple comparison. What will be interesting is that Nifty has rallied exactly 10% from those September lows. And while the mid-cap index has rallied 4.6%, it's amazing to know that 2.3% out of that, yes, half of this rally has come between yesterday and today. Before that, it was only 2.3%. This Nifty Junior is not a very, it's a very large cap index. The next 50 stocks after Nifty 50, that has gone up only 2%. And again, 1% of that has come between yesterday and today. So that really is amazing. Now, how does that translate into portfolios? We keep saying this. If Nifty is at 18,500, if on 29 September you would have put your money in Nifty ETF, you would have put money in mid-cap ETF, and you would have put money in junior ETF. Then Nifty obviously at 18,500, the mid-cap index would have resembled a Nifty of 17,550. Nifty Junior would have resembled a Nifty level of 17,150. And that is where the irritation, Nigel, that you spoke about comes in from the retail investors that, look, you guys keep talking about the all-time high market. My portfolio has done nothing. And let's look at some of the stocks. And these are the bluest of blue chips in terms of the mid-caps. Look at what they're doing. Tata Chemicals, below its September 29 price. Forget about a 10% rally. LIC Housing Finance, below its September 29 price. Marico is below its September 29 price. Colgate, comfortably below its September 29 price. Jubilant Foodwork, despite the rally of the last couple of days, is way below its price. Look at TVS Motor, it's come up a bit. Bata is below its price. Relaxo has fallen about 10% from its September 29 price. But again, as I said, it's yes and no. If you have been able to identify a couple of good pockets over the last 2 months, you have made money hand over fist. Look at some of these stocks, especially in the PSU basket, the PSU banks and the railway stocks. UCO Bank has almost doubled. Union Bank from 44 to 76. Bank of Maharashtra from 19 to 27. And then really the pocket that Nimesh had identified some time back, the railway stocks, RVNL. Look at that move from 33 to 74. And from IRFC from 21 to 32. So what I'm trying to say is that, if you pick good stocks, you have made money. Now, I want to leave you with a very interesting chart. And again, going by what has happened over the last couple of days, it gives me confidence that this is about to change. Look at the market breadth. You would have noticed that the red line, which is the declining stocks, has consistently been over the green line. Barring a few days here or there, it's consistently been over this green line. But look at the gap which has opened up over the last couple of days. Very interesting, especially today, there were far more advancing stocks than declining stocks. And keep in mind, if you look at what's happening, mid-caps and small-caps rally when interest rates start to cool off. In rising interest rate environments, normally mid-cap and small-caps underperform. That's one thing which is changing, that at least we're getting a sense that interest rates might be peaking off in the US, and that could be a big trigger for the mid-caps and small-caps. My sense is that the next month is going to belong to mid-caps and small-caps. You might see actually a massive catch-up rally.
You know, and one of the things, Anuj, it's a very interesting piece there, is that a lot of the supply, right, which Nimesh has been highlighting, that will also get done. I mean, the fact is there is only a certain amount of money, right? I mean, which will come towards market. And you've got thousands and thousands of crores of stock in all these new age IPOs getting sold, which has to get absorbed. So I'm assuming that a lot of it is diverted.
Even after such a large sell-off in the platform companies, the stocks have not reacted that negatively.
But it is getting absorbed.
So it's getting absorbed, exactly. So
the point is that,
I
mean, one of the reasons why the broader market perhaps is kind of lagged a little bit could also be because of that. And once that is behind, I mean, you get money going in other parts of the market. Nimesh, you're looking at IPOs, right?
Yes, Richard. So now I've just looked at the data of what the IPOs have done in CY22 compared to last year. So last year was a record year in terms of the IPOs. Just look at the data first. So if you look at the data, as I said, CY21 was a record year, but CY22 has not been far behind. Actually, it's been a good year as far as the IPOs are concerned. Look at the calendar. If you look at the report card for this year, there has been almost 31 IPOs, and the combined money which has been raised already is 54,000 crores. But the interesting part is, out of that, almost 70% is OFS, which means it's not got into the company, but it's gone to the PE investors or the promoters. Only 30%, which is 17,000 crores, is the fresh issue in this IPO in this year. In fact, for the remaining 4 to 5 weeks, I'm expecting another 5,000 crores of money to be raised by the IPO market. So that's the calendar for CY22. Now look at the performance of all the IPOs in this year. 80% of the IPOs are in the green, which means it's been a good year as far as the IPOs are concerned. Only 6 out of 30 IPOs are in the red, in fact, till Y2D. So look at the big gainers of CY22. If you look at the big gainers of this year, the biggest gainer is Adani Wilmar. That's up 180% from the issue price. The others like Venus Pipes, Veranda Learning, Harium Pipes, all are up almost 100%. There were some losers as well in the IPO list. So look at the big losers of this year. The AGS Transact is the biggest loser, down 57%. The biggest IPO of this year was LIC, and that's down 34% from the issue price. The others like Delivery is down 32%, and Transtech is down 12%. So that's been the performance of the losing IPOs. Now, if you look at the overall picture for CY21 and CY22, in CY22 was a record year, as I said. 63 IPOs were done, and they had raised over 1 lakh crores in the IPO market. This year, it's not been bad. So far, we've done 30 IPOs, raising around 54,000 crores. This can end up basically to 60,000 crores by the end of December. So it's been as I said, it's been a strong year for IPOs. And the good part was that almost 80% of the IPOs in CY22 are trading in the green.
Okay, all right, Nimesh, interesting piece out there. You come back to your seat. For the time being, though, we'll slip into a short break. But when we return, we'll discuss what lies ahead for the markets. We'll get to a chat with Venugopal Ghare of Bernstein. Don't go anywhere.